We've got the FOMC meeting tomorrow. Jerome Powell finally coming out and going to be laying down the law, telling us if we're going to get some rate cuts, some rate hikes. Gosh, I hope not. That'd be terrible. Maybe pivot towards quantitative easing out of quantitative tightening, or going to do absolutely nothing and say, hey, we're actually going to change some things up here. Welcome back to the Crypto Report. I'm Blacksea. Hit that like button. Subscribe to the channel right now. Let's hop in this video. So, guys, first things first, we're on Crypto Twitter. Follow me, 333Blacksea. I say, imagine the smell. And I show this chart of us just breaking down here. This is the Bitcoin chart. And from the bottom to the top every cycle, it's about 840 to 860 days. And we have achieved that level, 860 days. So I am showing, what if we just break down from here? In my opinion, I don't think that this has to happen, because if you look at the previous cycle, we did get a double top. We did. But where we were at back in 2022 was a very, very different time, with low interest rates, with lots of helicopter money, and a lot more global liquidity. And right now, where we're at, we are patiently waiting for the Federal Reserve to pivot to get some of those favorable conditions. So we're having the FOMC meeting tomorrow. Jerome's going to come out. This is by CNBC. This is what they're saying. The three different outcomes, the key points, right? They say Fed officials at this week's meeting are expected to hold interest rates steady, but adjust their views on the economy and possibly the future path of interest rates. So basically what I said, they probably don't do anything, and they say, oh, maybe we're going to cut another rate in 2025 instead of 2, or maybe we're going to start to pivot sooner rather than later, something like that. Or another thing, they say the committee could maintain its outlook for 2 cuts, remove one or both, or improbably add another as a statement of concern over a potential slowdown. Everything seems to be on the table. I do agree with that. Everything does kind of seem to be on the table because, guys, the traditional market is spilling over, and it's pulling crypto down with it. It's pulling the global economy down with it. And I have my theories on that, but we'll get into that later. But I do think that the market's kind of in shambles here. This meeting is the most important meeting until the next one. I say that as a half joke because every meeting is very important. But this one, it's a very crucial time of where this market is right now. This is kind of a make or break moment for the traditional market. And you know, we have lots of make or break moments in crypto for Bitcoin, and it's not really that big of a deal, right? It's not crazy because if you've been holding crypto for a long period of time, you know 10% drawdowns come and go every day, okay? But with the traditional market, when the S&P 500 sells off 10%, you're talking about people losing their retirements. You're talking about people use that money as their livelihood in retirement. It's a big deal. Jerome Powell and his colleagues in recent weeks have advocated a patient approach in which they don't need to be in a hurry to do anything. So, very interesting, because lately the overall sentiment has been, oh, Trump is pushing the market down to push the Fed to cut rates sooner and to pivot to quantitative easing. I think that's crazy hopium. I don't think that's a thing. I think that Trump doesn't care about the prices of the traditional market, or really the entire, crypto, traditional market, the entire market in the short term. I don't think that. I think he's focused on other things right now, like these tariffs, which we're going to talk about shortly. But I do want to emphasize that on poly market right now, there is a 99% chance we do not see a rate cut, okay? 99. There's a 1% chance that we see a cut. I do think that cutting is important, but I also think that cutting into weakness is not good. Every time the Federal Reserve has cut into weakness, it usually follows a recessionary period. And last time we've seen something where they've cut multiple times into weakness and pivoted to quantitative easing, well, we saw the dot-com bubble. We saw the housing crisis. There's big moves when that happens. So I'm okay with patient, but I think that the Fed is dragging a little bit here when it comes to cutting rates. And I say over on Crypto Twitter, follow me 333Blacksea, I say, Who is willing to bet Jerome tomorrow just blames the entire market spilling over on tariffs and nothing to do with taking too long to pivot from QT to QE? We call it the divert the blame game, because I have a very high likelihood, because I know that those questions tomorrow are going to be pretty spicy, because the market is selling off. The traditional market is down 10%. It is the quickest sell-off the market has seen, a 10% drawdown ever, which is pretty incredible to say out loud, thinking about all the other events we've seen in the past history. But it is significant. So I know Jerome is going to be getting blasted with questions about probably the tariffs, and we'll set him up to say, yeah, the tariffs are the reason why this is spilling over. But I do think that the Federal Reserve is taking too long to pivot, and I think that we're going to see some pain from it. I think we're already seeing that pain. Looking at the crypto fear and greed index, we are seeing potentially a bottoming out. We came all the way down to 10. That was the low, and now we're at 23. So the market is somewhat healing here a little bit, but real question is, will this be the bottom? If we see a drawdown of 73K, we probably see a 10 again. But 10 is really low. I bought Bitcoin when we hit 10. I think that anything in this area is a good Bitcoin buy if you are a long-term hodler like myself. I am a altcoin trader and a Bitcoin investor, my friends. That's what I like to do. That's a strategy that works out best for me. Not financial advice. You should figure out the best strategy that works out for yourself, but that's what I like to do. I put my money where my mouth is. But I do think that the market is fearful. The traditional market is very, very important. I mean, look at this, guys. Like, this is nothing to scoff at. I know it's so funny going from crypto to the traditional market. You're like, Black Sea, that's nothing. Like, that is a, from the top to the bottom, that was a 10% drawdown. Now we're trading at an 8% drawdown. That's nothing. Guys, that's a big deal in the traditional market. That is a very, very big deal, especially just 1, 2, 3, 4 weeks of consecutive selling. Big deal, guys. Big deal. You don't really see that unless you're seeing like back here where we saw all the rate hikes and we just saw our massive recessionary period, a little bit of a bear market. And this was also back here, back in 2022, the top of the bull market for Bitcoin. Quite fascinating. And where are we at right now? We're spilling over. Let's take a look at Bitcoin and see if there's any similarities. Oh, right. Look at that. Look at that. S&P 500, Bitcoin. S&P 500, Bitcoin. SPY, Bitcoin. It looks very, very similar here. We're spilling over, and I do think that a lot of the upcoming movements have to do with the Federal Reserve, which is really unfortunate because Bitcoin is supposed to be decentralized and it's supposed to be a hedge against the financial systems, and right now it's trading like the S&P 500, which is unfortunate. But guys, it's still a risk-on asset. It is still a risk-on asset. It's being treated like one. It acts like one, so it is one, okay? You know, if it breathes and walks and looks like it, it probably is that. It's a risk-on asset. But I do think that looking at Bitcoin here, we really hope that Jerome speaks some dovish talk and says, we're going to see another rate cut in 2025, or gives us a date on when they plan on pivoting to quantitative easing from quantitative tightening. I think that's what the market needs. And like I showed you in the beginning of this video of how we could potentially break down, guys, if we don't pivot, the Fed doesn't pivot in the next 200 days or so, I think there's a good chance that this is not a local top and this is a macro cycle top. But as of right now, local top. Local top. That's this is not over until the fat lady sings. And the fat lady singing is like October 2025. So I'm not saying it's over just yet, but this 100% is a local top. Like we've drawn down what is this, from top to bottom here, a 30% drawdown, which is not uncommon to see during bull markets, guys. On the way up, you see 30% drawdowns all the time. But I will say this is very, very similar to what we saw back here in 2021. And we're going to have to hope for a pivot, in my opinion. Guys, if you like some content, please hit that like button, subscribe to the channel right now. If you want to take advantage of this volatility, check out in the description box below or the pinned comment down below. We have a $5,000 sign bonus to Blowfin, as well as there's a $5.6 million prize pool, a trading competition. The more of you guys that join my team and the more trading volume we do together, the more rewards we get. That's all I got, guys. Please hit that like button. I know I just said it. Hit that like button, subscribe to the channel. I'll see you in the next one. Bye-bye.